Good morning. Thanks for coming. I wanted to start off with a quick poll. Can we get a show of hands for how many people in the audience own gold? A few here.
Is anybody raising their hand?
Yeah, there's at least a dozen out there.
Yeah, there's a lot of lights.
All right, how many people here own Bitcoin?
Friendly audience.
A few more.
Well, there's a sucker born every day.
All right, I wanted to hit you with some numbers. Since early 2009, when Bitcoin first began trading, gold has returned 47%. Bitcoin, over its entire 10-year history, has returned more than 60 million%. So it's off the charts. Peter, why would you still want to own gold?
Well, first of all, that's irrelevant. I mean, every bubble, starts out low. I mean, the people who are making money in Bitcoin are the people who are taking advantage of that and selling. And there's still a lot of air that's going to come out of this bubble. But looking at his commercial, I didn't realize we were getting free commercials. I should have had one. But he depicts all these people like lugging around these big, heavy bricks of gold. I mean, those would be multi-million-dollar bars of gold if they even made them that big. I mean, most people that have gold, you can carry all their gold in their pocket. You wouldn't even know it was there.
You have some in your pocket, right?
Yeah, I do. I brought this is real money. This is gold, but it doesn't weigh a lot. But as long as we're I should do a little history though to understand people understand the difference between money and currency. Because I also brought here. This is a 20, right? And most people think this is $20, right? It's not $20, right? I mean, it says $20 on it over here, but it also says Jackson on it. I mean, I'm not holding Andy Jackson in my hand, and I'm also not holding $20. So what is this? You can read right here. It tells you what it is. It says this note is legal tender for all debts, public and private. So it's a note, right? It's a note of the Federal Reserve, and a note is an obligation to pay something. Well, what is the Federal Reserve obligated to pay me because I have one of their notes? Nothing. But once upon a time, when the Federal Reserve first started in 1913, the 20 looked different. Because over here it said, this note is legal tender and is redeemable in lawful money. And then here it said, paid to the bearer on demand, $20. So what was the $20? This. This is what you got. So this was currency, right? It was a IOU for real money. And gold is the real money, right? Gold has been money for thousands of years. Our founding fathers made gold legal tender in the United States. But the reason that gold became money, in Barry's video, he says that, well, gold doesn't have any utility. Gold is the most useful metal there is. I heard, Novogratz was up here yesterday saying that gold is the only metal that has no use. Gold has more use than any metal out there. Anybody who has a cell phone has gold. It's in the cell phone. So a lot of people should have raised their hands. If you have a cell phone, you've got gold, right? It's in all the computer chips that make Bitcoin, and it's a store of value. You see these cufflinks here? They're made of 24 karat gold. There's 50 grams of gold in each one of these cufflinks. And the reason why gold is a store of value is you can melt these cufflinks down in 1,000 years. And then you can take that gold and use it to make a computer chip or a cell phone. Right? Gold does not lose any of its properties over time. Right? Gold is the most liquid commodity. That's why it's money. Right? It became money because it satisfied the qualities of money better than any other commodity. Now, what Bitcoin is like fiat money. Because in 1971, right, when we went off the gold standard, we just had this piece of paper. And since there's no gold backing this up, what gives this value? Why does this have any value? Well, one reason is because there's a tradition of using it. I mean, there's prices denominated in these, and contracts, and bonds, and insurance policies, but also this is all the government accepts in payment of taxes. They only accept Federal Reserve notes. So if you're in America and you don't want to go to jail, you need to accumulate these. But what really gives it value is confidence, faith that in the future, people will accept this in exchange for goods and services. But if history is any guide, all fiat currencies ultimately collapse because the confidence is lost. Bitcoin has a lot more in common with this than with this. Real money, except Bitcoin isn't legal tender. You can't use Bitcoin to pay taxes. The only thing giving Bitcoin value is because somebody thinks a greater fool is going to pay a higher price. Right? It's all the idea that it's going to go up and you'll be able to sell it. But confidence is going to be lost, and Bitcoin is going to collapse along with all the other cryptocurrencies.
I think Peter's strategy for this debate is just to talk for 30 minutes. So,
well, I got 25 more.
Yeah. All right. So I guess I brought a prop as well. So this is where I store money, and I think most of you do as well. Equating gold to money at this point is ridiculous. It may have history, but wampum and rocks and salt once played a role as money. Nowadays, money is digital. You can't walk into Starbucks with your chunk of shiny metal there and go buy a cup of coffee. And you like to highlight this so-called utility use of gold, and I think I'm here to set the record straight on that. Gold bugs like to talk about gold being used in cell phones and electronics. About 15 minutes ago, I tweeted out data that was put out by the World Gold Council that highlighted the demand for gold over the past 10 years. And just so you guys have this data as well, I'm going to just point out a couple things. Number one, electronics, which Peter is referring to, the use of gold last year was $10 billion, which represents 6% of annual gold demand. The World Gold Council includes a category of technology, which is 7.5%. You know what they include in technology? Dentistry. Dentistry is the World Gold Council's view of what technology is. But what's really more important is that over the past 9 years, the use of electronics in gold, the demand, has dropped by 15%. Yet, cell phone sales are up 500%. So Peter, explain to me, why is it that 5-10 years from now, the use of gold in electronics is going to be the primary driver of gold demand?
It's not, though. The primary driver is jewelry. That's about half the demand for gold, and that's been going on for thousands of years, and it's not going to stop. I mean, do you have a wife?
Yes.
All right, well, you know that you're going to be buying gold jewelry. But you're telling me that there's not that much use for gold. Okay, tell me one thing that you can do with your Bitcoin, other than give it to somebody else.
Okay.
What can you do with it?
$50 billion. You know what that number is? That's the amount of money annually people pay to send money cross-border. $50 billion. It's a $500, $600 billion cross-border market. So if Bitcoin continues to grow, it is going to absolutely save upwards of $10, $20, $50 billion a year.
No, it's not. I mean, first of all, when you're transferring money, you're actually transferring something. When you're transferring Bitcoin, you're transferring nothing. But if people actually use Bitcoin on the scale that you're describing, the cost of doing it, the amount of energy that would be required to maintain that network would dwarf the cost that you're talking about. I mean, we can't even afford it. We don't have enough energy to power the network that would be required. I mean, when you mine gold, you mine it once. It takes real resources to get this out of the ground. But then that's it. You're done. Right? Bitcoin requires a continuous expenditure of electricity to validate every single transaction that happens on that network. So it's a very expensive
Let's go back to the
do.
question of use cases, though, because this is really an important question. I mean, what can Bitcoin be used for today?
Right. OK, so remittance I mentioned. The transfer of value around the world instantaneously and basically free has the potential.
Free.
It's 3 cents to send a Bitcoin transaction.
Well, how high did the cost go when all of a sudden everybody started trading it and the cost skyrocketed? Up to like, $30, $40, $50. But I'm not talking about that. Forget about the fact, I'll give you the fact that you can exchange it, right? I'm saying apart from that, because money, in order to be money, it has to actually have a value independent of being a medium of exchange. Right? So
like dentistry. Like dentistry.
No, well, dentistry, yes. I'd say about 1% of the gold every year goes for dentistry. I have gold in my teeth. If you have a crown, there's gold in there. Right? And that's one of the many uses that gold has, because gold can store its value. That's what's unique. That's what I said. My cufflinks in 1,000 years, that gold is not going to change. I can drop it in the ocean. You can find it in 1,000 years. It will retain all of its properties, and it can be used as if it was brand new. Right? It is an improvement over seashells and wampum and other forms of money. Bitcoin would represent going backwards. That wouldn't be an advancement. That would be worse. There is no way that it can even function as money. It's not even going to be able to function as currency.
Well, why do you think Bitcoin will hold its value? I mean, is that what you're saying?
But it has no value to hold.
So what I think gold bugs don't appreciate is there is a generational shift in investor mindset that's happening. Over the next 25 years, $68 trillion of wealth is going to be handed down from boomers, Gen X, Gen Ys, and millennials. And I can assure you that the younger generation of investors, many of you here apparently agree with this, don't view gold the same way that our parents or grandparents did. We did not grow up on a gold standard. We did not grow up during a time of war. So as that $68 trillion gets handed down, it is not going to stay in gold. Now, is it going to, whatever is in gold right now, is it all going to go into Bitcoin? No, of course not. But gold is an $8 trillion market cap asset class. Bitcoin's $100 billion. So a lot has to go right, or frankly, in Peter's view, a lot has to go wrong for an $8 trillion asset class to double in price. At $100 billion for Bitcoin, it really does not take a lot for Bitcoin to outperform gold over the next 10 years.
So you think Bitcoin will outperform gold? And let's put this
Absolutely.
in perspective. Today, Bitcoin's trading at about $6,000. Gold's at about $1,280 per ounce. Do you think gold will outperform Bitcoin in the long term? And what time frame?
In the long term, of course. I mean, almost everything is going to outperform Bitcoin. But in the short run, yeah. I mean, Barry's point is a bunch of young, inexperienced kids are going to be dumb enough to buy Bitcoin. Maybe they will. But as they get older, they're going to learn better.
This audience was they own Bitcoin.
Huh?
Half the people in this audience own Bitcoin.
Yeah, well, I doubt they have a substantial amount of it. Maybe they bought it like they would go into the casino here and buy some chips and gamble.
Okay.
But the air is already coming out of this bubble, right? The peak of the market was at 20,000,
okay.
Right? And so that was a blow-off speculative mania when they launched the Bitcoin futures and everything rised. So now we're in a bear market, and in a bear market, you always have rallies, right? That's what bear markets do. They try to sucker in the bulls, right? You have these false rallies. We're having one now. But initially, a lot of people got suckered into this pump and dump scheme because they heard all the stories about the young kids that took their bar mitzvah money and now they bought a Lambo, right? And everybody thinks they're going to get rich because they think these kids were geniuses when all they did is get lucky because they bought Bitcoin and then the price went up. But so there's a lot of stories out there about people who got rich because they got in. Well, pretty soon, it's mostly going to be stories about people who lost their life savings because they put real money instead of play money into Bitcoin. And when you have the horror stories outnumber those, positive stories, the brand is going to be tarnished. I don't think you're going to have a bunch of young kids rushing to buy Bitcoin because they're going to know how much money their friends lost because they bought it.
Peter, what do you think?
Who's been buying gold over the past 5 years?
Not that many people. That's why it's still so cheap.
Okay, but
you know who's buying it? The Indians. Central banks have been buying it. They still don't own nearly as much. They're not buying any Bitcoin, by the way, but they are buying gold because gold is money.
So let's talk about that for a second. So also in that tweet, you can see the demand from central banks over the past 9 years. Now, what's interesting is the most aggressive buyers of gold over the past 5 years have been central banks, namely Russia and China. And so explain to me, Peter, this disconnect between Goldbug's view that central bankers don't know how to, from a monetary and fiscal policy decision-making perspective, don't know what they're doing, yet they're really smart in that they're buying lots of gold. Explain that disconnect.
Well, not all central bankers are buying. There were some dumb ones who sold. But look, before the United States led the world off the gold standard, right? Gold was the reserve asset, right? When the dollar was the reserve currency, it was the reserve currency because it was redeemable in gold, payable to the bearer on demand in gold. In fact, I don't have the old Federal Reserve note, but I did bring. This is a United States note, courtesy of Mark Skousen, for $20 payable to the bearer on demand in gold, gold dollars, right? But I think what foreign central banks are doing, the last time I was here at the SALT conference, I made a prediction. I said that if the Federal Reserve ever tried to normalize interest rates, they would fail. I said if they ever tried to shrink their balance sheet, they would have to abort the effort before they had any meaningful reduction. That has already happened. Now, when the Fed initially went to zero and launched QE, gold went to $1,900 an ounce in 2011. And the reason it did that was because people were correct, and they were worried about the negative consequences of what the Fed had done. But then the Fed was able to convince people that not only did its policy work, but that it could be reversed, that they could unwind it. Well, the Fed's about to go back to zero, and they're about to do another round of quantitative easing, QE4, that'll be bigger than 1, 2, and 3 combined. And when they do that, nobody is going to believe it's temporary. Nobody is going to believe the Fed has an exit strategy, right? This is just banana republic debt monetization, and foreign central banks are preparing for a crisis of confidence in the fiat-based monetary system, in the dollar in particular, and so they need to act now to build up their reserves of gold so they have something real, so they have real money backing up their currency rather than just some other piece of paper.
So,
on the
so
flip
gold
side of
is
that,
essentially
on the flip side
a
of that,
hedge on the U.S. dollar weakening. It's essentially a bet on the U.S. dollar weakening.
well, Barry, let me ask
it's a
you
hedge
one
on
question.
all currencies weakening.
Okay.
It's real money.
Barry,
so
do
it's
you
a,
think-
it's a basically it's a gold is an investment is basically an investment against the United States.
Gold's not an investment. Gold is money. Gold is not an alternative.
In what
to,
world is gold money?
It's in our world. Just because it's not being used readily, although you can, right? I mean, you said you can't walk into a coffee store. I have a gold account at Gold Money, and I can go in there and I can buy gold with a cup of coffee easier than you can do it with Bitcoin.
Okay,
In fact, my debit card. Here, another.
I don't know if I've ever seen anybody do it.
This is made of 24
Okay, well,
karat gold too.
Okay, you could pay. Okay, well, but Barry, I do have a question for you. I mean, will we see central banks buy Bitcoin? Is that feasible? Will central banks start buying digital currency?
Sure, at some point, yeah, of course, sure.
Sure or yes? I mean, why
Yes,
would they?
Absolutely, yes.
They'll never
Yeah.
buy it. There's no way they do that. I mean,
Why would they?
You're
Why? I mean,
predicting
why?
central banks will never buy digital currency?
they're
That's
not
your
going to buy Bitcoin. I mean, look, is it possible that central banks may one day issue digital currencies? Sure. But, and I disagree with Nir Rubini. He said it will make monetary policy more effective. No, I think it'll make it even more destructive than it is now. I mean, anything that makes it easier for central banks to create money out of thin air, right, to create inflation and prop up governments and inflate asset bubbles is not a positive thing. But they might try it. But there's no way that they're going to buy Bitcoin or any one of these other, digital fiat currencies that have been created by, independent third parties.
As an investor, these are investors here. I think investors are hearing the gold argument and are hearing about the scenario where it performs well, things are kind of going not so well in the world. And I would argue, given that Bitcoin has all the same characteristics as gold, scarce, finite, portable, highly divisible, I think it has a lot more utility. Arguably, Bitcoin would perform well in that environment that Peter's describing.
Yeah,
but you know what?
Though.
But let me finish. But Bitcoin, and more importantly, the community and the industry that is being built, the thousands of companies that have been launched over the past 5 years, the tens of thousands of jobs that have been created, the real innovation that's happening, I assure you, is going to propel the Bitcoin price higher because it will generate real innovation in a world of economic growth where gold will only perform well if the shit hits the fan.
What is the fair value for Bitcoin and gold in each of your views?
Well, first of all, let me just make a point about what Barry said, and to finish the point that I made about gold not being. Gold is not an investment like stocks or real estate. Gold is an alternative to the dollar, to the euro, to the yen. It's just a form of liquidity, right? It's not. You don't own gold. I mean, people are buying Bitcoin because they think it's going to go up. People are not necessarily buying gold because they think the price is going to go up. They're worried about inflation, the value of fiat currencies going down, and they want to have some liquidity. And they are holding it in real money. But what was the? I forget. What was the point that you just made? That I wanted to. Oh yeah, Bitcoin doesn't have any of gold's properties. I mean, yes, Bitcoin tried to counterfeit some of the things that made gold good as money. The fact that it's divisible and portable and supposedly scarce and all these things that made gold better money than cattle or wheat or oil. But what Barry is overlooking is that gold never would have been money at all were it not for its value as a metal, as a commodity, as a luxury good that was desirable all over the world. If it wasn't for that, none of the other characteristics would have mattered. So simply trying to say, well, this is divisible and portable, it means nothing. What are you dividing? When I divide gold, when I have an ounce of gold and I divide it into 2 half ounces, each coin is a half an ounce of gold. If you take Bitcoin, you have nothing. If you divide it into 2 halves, you have half of nothing. So you're not dividing anything. You're not storing anything. When he says it's a store of value, you must have value in order to store. Bitcoin has no value today. There's nothing you can do with it. So it doesn't make sense to store it for the future because there'll be nothing you can do with it in the future either.
What do you think is the fair value for gold?
Well, I mean, gold, gold is, I guess, worth, you have to look at all the supply of dollars or euros or yen and try to equate it. But there's a long history of comparing gold to other commodities. And even like, a classic is a suit of clothes, right? This 1 ounce of gold that I have. I don't know, what do I do with that coin?
It's right here.
But this would have bought a fine suit of clothes 100 years ago, and you could buy a suit today. 100 years. And in fact, 2,000 years ago, you could buy a really nice Roman toga with an ounce of gold. But gold has real value. I mean, obviously, it's scarce, and it takes a lot of resources to find it and to mine it. But I think if you historically look at what gold is generally worth, you have a long history of prices in terms of gold. You can price the Dow in terms of gold. You can price real estate. You can price other commodities. You can go back over time, and you could decide what is a fair price for gold relative to other commodities. I think gold right now, relative to most financial assets, is very cheap. I think relative to other commodities, it's very cheap. But I think what really makes gold undervalued is not just the supply of currencies that exist today, but the enormous increase. Because you've got all these central banks now that are down at zero. You've got a lot of interest rates that are negative. One of the knocks against gold used to be that it didn't pay any interest. I could put dollars or euros or yen in the bank and get interest. Well, now you can't. Well, zero interest is better than negative interest. And you have all these asset bubbles and all this government debt that needs to be inflated away. I mean, people should be buying gold a lot more now, and they will as soon as they comprehend the position that the central banks have placed themselves in. But I don't believe anybody is going to jump out of the frying pan into the fire by buying Bitcoin. I think you're going to see a crisis in the cryptocurrencies before you see a crisis in the sovereign fiat currencies.
Can you put a price on where you think gold will be?
Well, yeah. I mean, look, gold started this bull run. It was under $300 an ounce in 2000. And it got up to 1900, as I said, when people rightly concluded that what the Fed was doing was a mistake.
In 2011.
It's pulled back, right, to around 1250, 1300. I think this next leg is going to carry it to somewhere between 5 and 10,000 when it breaks out of this congestion. But who knows? I mean, there is no ceiling to the price of gold because there's no floor to the value of this. I mean, this is worthless intrinsically. It's just a piece of paper.
So, Peter,
right?
just so I understand the math, you said 5 to 10,000. So let's call it 5x from where it is right now. So you're suggesting that an $8 trillion market asset class is going to grow to $40 trillion?
Well, if that's the math, I mean, that would probably still be relatively low compared to historically where it might be relative to the value of all the global bonds or all the global stocks.
So where does that demand come from? Where's the demand going to come from?
It's going to come from individuals, it's going to come from institutions, and it's going to come from central banks.
Dentistry.
No, I mean, there's always going to be demand for gold in dentistry and in aerospace and in consumer electronics and in medicine. And who knows, they may discover all sorts of uses for gold in the future that we don't even know about today. But that demand is going to be there. But I think gold is under-owned as an asset. If you look around the world at portfolio managers and how much gold they have exposure to, it's very little compared to historically what people used to own in gold. So I think there's a lot of potential for the gold market to mature as a lot of people lose confidence in central banks. I mean, it's amazing to me that after two big bubbles, people still have confidence in central banks. But this is the biggest bubble the Federal Reserve and the central banks have ever blown. And when this one pops, it's going to make the 2008 crisis look like a Sunday school picnic.
Before
and
we run
I think
out of
by
time,
then people will figure it out.
I want you to answer this question too, Barry, though. What is the fair value price of Bitcoin? I mean, we've seen it go to 20,000 at the end of 2017. Now we're about 6,000. I mean, is that where it should be trading? Answer that question. How much is this thing worth?
The fair value is where it's traded right now. I mean, the market has priced it where it is right now. But I think you have to think about the potential for Bitcoin really kind of in two different buckets. So as it captures a large portion of the $8 trillion gold market, make whatever assumption you want, 1%, 5%, 10%, 25%.
What is the assumption that you're making of how much of gold that Bitcoin can capture?
Oh, gold's gonna in my lifetime, gold is gonna completely lose its status as this mythical store of value investment.
It's not a myth. It's been storing value for thousands of years. You have to ignore that in order to, advance this Ponzi scheme.
So the other bucket that you have to look at is the value from the utility.
Yeah.
So the ability to provide banking services to the unbanked and the underbanked, 4 billion people, the ability to dramatically reduce the cost of remittance, the ability to transform the way our financial markets work.
That's all hype. None of that is true.
If it does all of that, and if it captures a certain percentage of the gold market, I mean, what is the potential?
It's a lot higher than it was today.
Care to put a number on that?
Certainly not.
Most likely the market has peaked. The question is, how long does it take before it goes to zero?
Have you ever considered owning any Bitcoin or digital currencies? Or
Somebody gave me some once. I still have it. I
Peter,
tried to sell it. I couldn't figure out how to do it.
There's still time for you to join the winning team.
Huh?
You'll be welcome with open arms.
Look, I understand. Like, I mean, you got a lot of Bitcoin you need to sell. You need to create the demand. But, I mean, what I find is ironic, too, is that you knock how expensive it is to store gold, which is actually quite cheap. But then, you're charging 2% a year for people to buy your trust that owns the cryptocurrencies. I mean, that means you're guaranteed to lose 2% every year, right?
We have
just
to
in
wrap
the management
up.
fee.
But do you own gold? Do you own gold or just Bitcoin? And
I don't know anybody who owns gold.
So just briefly,
You don't know anybody
how
that
much
owns
how
gold?
much
That
of your
shows you
personal
how undervalued it
portfolios?
is.
How much of your personal portfolio do you have in Bitcoin, and how much do you have in gold?
Well, I have a lot more money in gold stocks at this point than I have in physical gold, but I have a lot of gold.
25% of your
No,
net
I
worth?
don't have 20. Not in physical gold. No.
Okay,
No,
but in gold stock, and
Well, I have a lot of money in gold stocks right now, and I manage a gold fund.
yeah.
Europe Pacific Gold Fund. Actually, I just got an award. I've got the #1 gold fund for the last
Congratulations.
5 years and the last 3 years.
Congratulations, Barry. Do you know how much?
Oh, I'm all in.
All in Bitcoin.
All in crypto?
Well, I
100%.
mean, not specific Bitcoin.
Okay, 100% crypto. All right.
Yeah, that's the other problem.
Well, that's all the time we have. I'm sorry. We could keep
Yeah.
debating all day, but thank you guys so much. Thanks for coming.
I hope I saved people some money.
That was great.